Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 11th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. What you'll see right now is that the ES continues to trade within a very narrow range up here. It continues to hold at highs as well. So that's the narrow range. We got 6 days today developing at the moment. This thing is formed obviously above recent highs. That's all-time highs. And it also has a clear upper trend line up here with a lower trend line that creates that channel right there. And we're right at the upper line of that channel. So again, we're right at a very critical point in the chart here. We've obviously had a very nice rally from the 200. We're holding above the previous month's high here, but we really haven't super advanced the ball higher. We've just mainly stayed in a narrow range. Again, any pullback here on the first test could still be a buying opportunity for a pushback toward 3100. So anything, say for example into 3050, could still be a buy to 3100, maybe even beyond. But eventually, if there's a failure to hold 3050, that could suggest maybe perhaps a rotation back to this rising 200. So that's something to look for here today, is how does price respond within this range? Does it get outside the range? Because for the most part, it looks like we're going to have a very quiet economic calendar this week. Nothing scheduled for Monday or Tuesday. Economic reports start on Wednesday with core CPI, and Fed Chair Powell will testify at 10 a.m. Central. Thursday, obviously, Thursday we'll also have Chairman Powell testifying, this time at 9 a.m. with crude oil inventories at 10 a.m. on Thursday. So things a little bit mixed around here today and this week. But so for the most part, we have ourselves a narrow range. We'll see how this thing develops. But overall, this remains a very bullish market. Things continue to push higher. And until proven otherwise, you've got to be looking to buy the dips. It's just, if this thing is going to fail, this is where it would happen. It would happen above the previous highs, all-time highs, with a range up here, and there'd be a failure to hold this key level that would result in some sort of pullback. So again, watching this market to see how it develops here within this narrow developing range. All right, let's take a look here at the NQ. You'll see the NQ here also trading within a very narrow range. This one 6 days. This one also trading within a very bullish advance. It's holding above the key range high and all-time highs and above the previous month's high. Very similar price action here. Again, this one has a narrow range from the high here that came very close to 8,200. The low right down here. And that's just above this previous month's high. 8-period average is a little bit lower. So again, as I mentioned before, if price were to drop down into this zone, the previous month's high price, which is 81.41, so 81.41, 81.40, if you want to call it that. If that area is defended, there could be a bounce opportunity off that zone. Any failure to hold this zone would then lead to a push downward back toward the midpoint of the previous month's range, and that'd be 7,800. So that's how I'm going to look at this one here. But as I've mentioned before, I've said that along the way, and this thing has continued to hold each and every step so far. And so right now, this is the next major step here to see if it can hold. If not, perhaps there's a rotation down. If it can hold, then perhaps we are getting a true breakout from this compression, and that could be significant on a long-term basis. All right, let's take a look at crude oil. You'll see crude oil here pulling back. It's had quite a bit of choppy trading behavior lately. We had a very strong low here off the 51s, just below 51 basically, and that's where we've seen strength before, and it is quietly chopped sideways to up, and that has been a mean chop there. It has a very clear upward trajectory, but it is now sitting right at the key range midpoint. That's the key range mid right there, and that's been a decision point for this chart on many occasions here. It's right below 58.07 and that 58.07 FOMC key level from September. So we dropped away from the FOMC key level, we found rejection, and we bounced all the way back to it, but we have yet to hit it true. We came about 19 cents at that level. So Perhaps we do get that level there pretty soon. 58 is going to be very important, because if it can get above 58, it opens up the next zone above into as high as 61. If it can't get above 58, as it's shown back this way, then perhaps we rotate right back to 54s. This thing has been trending quietly higher. Seasonality has been bearish, or seasonality is bearish, but this one so far, after the steep drop, it has quietly pushed higher here, and right now we'll see how this thing responds around the 58s. Alright, let's take a look at gold futures. You'll see with gold, this one made a pretty big breakdown, and it's been giving us the signs that this was going to happen already. But you can see right here again, previous month's price, close price, offered 2 days in a row. It tried to hold the pivot range for the month, and then it went offered through it pretty hard, all the way out the other side. This is an inside value as well, with this pivot range being inside this one, and then it broke it to the downside. Retest bearish, downside break continuation, and now it closed below the previous month's low and is trading now below that level. So that has been a pretty aggressive push downward that entire way. Now, as I've mentioned, this market has been very bullish overall, especially since the August 2019 or 2018 low. It's been very, very bullish since that low, and every LVN has been honored in the up move. This 1375 has never been retested after it broke through, and then the 1460 level was never retested after the breakout. This one came to 65 and bounced, and then here we are now, right into 1460. So we are still inside the LVN. There is still the potential to see this thing fade back to 1560, or 1520 rather. But if it cannot hold 1460 for long, there's a good shot that we could see a push back to the opposite side of this range here, which would be about 1370s. So that's going to be something interesting to watch. Again, if it can get back above 1465 here, or find rejection, then there could be a good little bounce here. But 1460 is going to be the key level here to watch. If it fails to hold that level, perhaps a little bit more weakness to 1420 and 1380, 1375. Alright, that is it for now. We'll see how this plays out heading into the new week of trading. Good luck, trade well, and I'll see you in the trading room. Take care.